Here's a 30-day, 4-hour chart. GameStop. Notice anything about it? Anything special? Anything stick out to you other than the fact that it is parabolic up and right? It's gone from 20 and a half. It hit a high today of 28. I did a video on it yesterday, but I have to talk about it again, simply because it's showing a lot of movement and the options markets are also getting heavily involved. And there's a couple really important things I want to highlight as I look at this specific chart. Now, first and foremost, I don't do a ton of like candlestick patterns, but I do look at candlesticks for the qualitative information that they can provide to us because they can do that. So for example, if we look at a candle like this, it has a relatively small body where it opened here, closed here, and it obviously had much longer high and low wicks. What that tells me is that over the course of this candle's lifespan, which for those interested right now, again, it's a 30-day, 4-hour chart. So it's a 4-hour time frame in this candle. It tells me that there's a really significant battle over price. It means that at some point it opened here, it went all the way up to here, then enough sellers stepped in and then some to drive it all the way down somewhere towards here. Buyers stepped in enough and then they reconciled down here. That's a different story than the second half of what you see today. So this is the candle essentially from 10:30 Pacific time into the close. It opened down here. Notice how it has no tail to the downside. That tells me that this is voracious buying pressure up until it started breaking above 28. Then it stepped into moderate sell pressure. Notice how this candle split almost 50-50. It's 57 buy, 43 sell in terms of volume. But all of that happened in here. So this is still really extensive buy pressure. And we've seen this sustained over a few days now, which I find interesting. The video yesterday that I did literally was talking about the importance of 25. And I even said yesterday, I genuinely believed that it would break through 25 simply because of the way it acted here. It popped above 25, got pushed down just below, and it means lots of people happily unwinding. That started happening today, but take a look at the expansion in volume still. We've gone from 5.5 million here, now 15.9, 25.7. This is where things are busy. Now, I know a lot of GME community members, apes, they are looking for MOAS, which hats off. I hope you get it. But for those like myself, again, I am very straightforward with you all. I have my position in GameStop, but I trade around GameStop at the same time. The reason why I trade around it is because this kind of movement is really tradable. And again, in the video yesterday, I talked about the position that I built here in addition to my existing position, simply from the expansion of volume and trying to play at least a probabilistic move. And another note, people were asking, why did I enter here instead of something like here or before when it looked like it was building a floor? And it's because I need movement. I am a trader. This is how I make money, is by trading. I need to realize the gain in order for me to make money. That's how I live. So the issue with this is sometimes stocks can stay really quiet on these periods. So I don't like getting in during these for a trade. Now, if it's for a longer thematic position, it's completely different because this is showing you, again, I didn't draw this line anytime recently. This has been here for at least a month. And this, we can see that there's a floor here. And whether or not it breaks through that floor is TBD, right? Price can always do whatever it wants. But the main point is that it didn't here. That's worth noting. So I enter here because it's a low risk trade in terms of how I structure the position. The risk on the position itself is set with an exit below this perceived floor, which is 20, 25-ish, something like that. I had gotten in at 21.73, so it's about a point and a quarter of total risk, which is trivial, it's tiny. So then you can build a much larger position because the risk is managed to the downside, and then See if you can get a bigger move. It's about creating an asymmetric payoff potential, again, for the shorter term aspect of the trade. So I wanted to talk about that because I got literally 2 emails about it, which are great questions. And I want what I do to be explained and understood by people so that you understand when I'm analyzing this stuff, how I'm looking at it, because there's 2 very different perspectives that I see, 3 actually, with GameStop. There's the structural perspective in terms of its manipulation and the way that its manipulation is somewhat predictable to a degree and how that can be traded. The second time frame, or the second perspective, is a shorter term time frame, which results around trading these kinds of moves. And then the third perspective is the longer term time frame, where GameStop is now sitting on literally stockpiles of cash, slowly starting to reinvent itself as a business. And I cannot root hard enough for GameStop to get through all of it's been through so far, because this was almost another victim of seller boxing, which is just shitty. It's shitty that that is a thing and people are that fucking greedy. So I love it from a long-term perspective because it's doing a good job reinventing itself as like a legitimate business. It's not just a charity case. A lot of time, one of the things that supported GameStop for so long was a voracious investor community that was just like, we just like the stock. We don't care. Fuck you guys. We'll stay here for 3 years. And for 3 years, the stock might not do a ton, but we don't care. We're still here. And that's admirable, because without that kind of support, GameStop would probably be in a different picture. But now it becomes an even more interesting story, in my opinion, because they just started the new branching out with card grading, which is really cool. Newton was teaching me about that, which is really neat. I don't do collectible cards. It's not really in my wheelhouse, but it's cool as a business line. And you can see that they're reinventing themselves. That's, you can't enjoy that enough. So we are seeing a really significant move here. That's what this comes down to. Take a look. Now, it does look like the next serious volume node, right? We already broke through this one single day, popped right above it, didn't care, off to the races. The next serious volume node really starts that it's going to interact with is this here. And this is using a 6-month daily chart. So it's looking at essentially the 27 to 28 handle, something like that. If I go out to a year, you can see that that volume node holds and it's already breaking through it. So the interesting part here is as it breaks through this, there's really not a lot of overhead support that's in the market. Now, the reason why overhead support, or I'm sorry, overhead resistance, the reason why overhead resistance is so important is because overhead resistance comes in the form of, again, all these different traders that got in at really high levels that are selling, because there are people that got in at 50 that are just happy to have an opportunity to get out even at a marginal profit if they continued scaling, in which a ton of people transacted in here. Look at the size of these candles in volume. Thousands and thousands and thousands of people were transacting in this entire range. So there's a good chance a lot of these people will look to unwind here, but so far, it doesn't matter. The buying pressure is showing up. Now, let's take a look at the option side of things, because here's another thing that is incredible to me. Take a look at the calls. 420, literally can't make that up. 420,000 calls against 77,000 puts. Incredible, incredible call volume on the day. What's even more interesting now to me is the fact that take a look at how many of these were bought. Over 30% likely were bought, because you can't tell on the mid, but some of this mid is going to be bought, some of it's going to be sold. So definitely over 30% will have been bought of this total volume. So there's massive influx of calls coming in, and take a look. They're short dated. So if you take a look at these different strikes now, the 30s had 53,000 contracts trade today. We have the 25s at 33,846. So what does that mean? Well, if we come in here and we start to take a peek at, if we start getting near the 30s, it gets really interesting, because the open interest here on the 30s is literally about to double. The existing OI right now is 23K. There's 53K transacted today. So at least half of that is going to port over to new trades. It doesn't look like there are a ton of trades that were closed. So the only risk I see here right now in terms of like really starting to build out a big move is this is still heavily predicated on underlying transactions driving this. And I say that because the total open interest in here, essentially from the 27.5, 28, 28.5, 29 is very light. So we obviously saw a bit of a ramp happen here. Not significant, but enough to edge price for sure through some hedging behavior. Because this in and of itself isn't going to cause massive hedging behavior. 33,000 were traded today, but the 1452 that were added over Friday, not a ton of activity on that just yet. So what I'm looking for is to see what this materializes into, because take a look at these 28s. 16,700 volume today against 3,000 OI. Oh, it's moving after hours, just ticked up almost to 28. If this 28 gets gobbled up, that starts to look pretty aggressive to me, because these, again, are a little bit weaker, but there's been so much added here at the 30s that it's likely going to force some hedging behavior. There's still pretty low delta, so it wouldn't surprise me if market makers tried to be cheap here. But again, the tricky part about this whole thing is that it's still not hard to borrow. So the access to shares isn't going to cause a restriction just yet. And there's not enough in this options chain to like really force a true gamma squeeze, but it can absolutely add some pressure. And I fully expect to see that. Now, a couple other things. Take a look here. We have some serious size entering the equation. So there's some really big trades going down. And this doesn't surprise me, by the way. You see these out in 2025, how they're moving. These are people that establish these. I have trades that are further out in time, literally for these kinds of instances. Because what you could do is you can get them on for pretty cheap. When you get your move, you can unwind part of your position to cover the remaining cost of your existing position. So it's literally a risk-free trade, so that then you can hold on to it up until expiration with no issue. And if you get a giant move, now it's a true asymmetric payoff potential. So seeing some of these longer term options coming off doesn't surprise me at all. What I am interested in specifically, though, are what's happening with this near expiration, this upcoming OPEX. The reason why this matters so much is because this is where the near term pressure starts to come in. And we can see a few things. I want to make sure I'm not filtering by any size. It looks like we're good. And I'm sorting by premium. So we can see that there's a few $100,000 trades coming in today. The reason why these are like actually a little more impactful than I typically would give credence to this size trade is because it's for this Friday. This is for a really short duration. So these are really strong trades that need movement, and they need movement fast in order for them to really show a profit. So you have 1,000 of the 27s here, 1,000 of the 27s here. Again, it's really hard to see because this almost looks like they were offloaded here, right? So it could be somebody that bought $1,000, $1.56, another 1,000 at 2, unwound the whole thing at 230. They still made a decent chunk of change on that trade if it's the same person. It's a little hard to tell. So this looks like some near-term trading activity to me overall. The other thing I want to take a look at really quick is just the actual dark pool feed on shares and see if there's anything that jumps out at us here. I haven't looked at this yet. And a couple, let me sort this by premium. Yeah, I mean, there's some big trades coming through. This is a little bit more too. This is over the last, I want to say like 90 days it's looking. So let's restrict this to today. And we have 4 of them that are over $1 million. So there's pretty significant overall share volume here. Now let's take a look over the last week out of curiosity. And you can see, yeah, the bulk of these larger trades are really focused on today. So I just wanted that for general context. It looks like the stock definitely has some pretty significant volume stepping in, no doubt. So next steps, we need to see how this continues to run. I think one of the most important things to keep in mind is that this has pretty significant tailwinds right now, pretty significant tailwinds. And a lot of that stems from this. This is the Russell 2000 futures, Russell 2000, IWM, all of them looking at the same thing. But small caps are on a freaking tear. So this is finally adding wind to the back of GME, where for a lot of small caps, GME included, it's been wind in the face. And it's still been increasing slightly even in that context. So on a longer term time frame, this looks like the floor to me, 19 and a half to the low side. It looks like about 20 and a half is being respected so far. And that's essentially been the case from the end of September. So we'll see where hopefully the floor just continues to slide up on this thing, because from a fundamental perspective, it kind of warrants some of it. And right now, the next threshold that we need to get through is going to be this block here, really. And it's not even that severe, the 28 handle. So that's what I'm looking at. As always, if you have any questions, anything you want me to take a look at, let me know. Be an outlier, be an ape. I'll see y'all later.